Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz, and today we lead with news of a large number of key releases to end the year. It might be the full final week before the summer holidays here in New Zealand, but there will be a lot going on and a lot to follow. Here, of course, it is the week when corporates and government release their bad news stories in the hope people are distracted. Then the REINZ will release its November data, and there'll be a full dairy auction on Wednesday morning. Thursday will bring our third quarter GDP result, expected to confirm we've been in recession. But there is not a lot on the card from Australia this week, other than a consumer sentiment survey from Westpac, which we need to keep an eye on. Globally, the big set piece will be the US Fed's monetary policy review on Thursday New Zealand time. A 25 basis point cut is expected there. And that comes in the middle of a raft of other important US data updates. China has a good chunky set too, and Japan will chime in with its own, including their rate review, where now no change is anticipated. There are other central bank reviews as well, from Sweden, where rate change is uncertain, Norway, where it's likely to have no change, Indonesia, a 25 basis point cut, Taiwan, no change, Thailand, no change, and the Philippines, a 25 basis point cut is expected. Russia is also expected to push its policy rate up by 200 basis points to 23%. Canada and the EU will have their own key data releases. In the meantime, we start the week with global interest rates on the move up, and the US rate inversions have now vanished, except in China, where there's a rush on for the safety of government bonds, which is driving down yields to record lows, and positive sloping yield curves are returning. As we noted, the US Fed is expected to cut rates by 25 basis points at the December meeting this week on Thursday New Zealand time, bringing the benchmark range to 4.25% to 4.5%, and a full percentage drop since September. Economists now anticipate slower cuts ahead, with only 3 reductions projected for 2025. Those cuts may be delayed if inflation remains above the Fed's target. As the Trump team prepares for the transition, its anti-regulation focus is coming into view. They're seeking candidates to eliminate or eviscerate the FDIC, that's a move sought by big banks, and rid themselves of car crash reporting, a move sought by Elon Musk. The billionaire sharks are going after consumer protections. And Canadian manufacturing sales were up strongly in October, their best growth spurt in nearly 2 years. That made them 1.4% higher than the same month a year ago. While that isn't quite besting inflation, the recent moves up will be encouraging them. Across the Pacific, Chinese banks extended just 580 billion yuan in new loans in November, less than half the same month a year ago, and nearly half of what was expected. This is the lowest new lending for a November since 2012. The decline took place despite the aggressive monetary stimulus measures from the central bank in late September in an attempt to halt the property market downturn. There have also been much higher levels of local government debt issued in that time too. Poor credit demand in China is saying a lot about China's management of their economy and its prospects. President Xi and his top team have been meeting in their big set-piece Central Economic Work Conference, and what is glaringly obvious from this so far is that they don't know what to do. And financial markets are sensing that with their pullbacks. But it sounds like they are preparing to cut both key policy rates and their reserve requirement ratio in 2025 again, according to new reports. EU industrial production is still in its decline phase, now stretching to 18 consecutive months. It'll be little comfort to them that the October decline was smaller than the prior month. In Australia, a report suggests that auction clearance rates in Sydney have fallen sharply over the weekend to be just on 50%, a long way lower than the about 80% level of just a few weeks ago. The US Treasury 10-year yield is now just on 4.40% and up 1 basis point from this time Saturday, but that is quite the move for the week, up 26 basis points. And the price of gold will start today at $2,647 an ounce and down $11 from Saturday. Oil prices are firmish, but still just over $71 a barrel in the US, while the international Brent price is still just on $74.50 a barrel. And the Kiwi dollar starts today at just under 57.6 US cents, unchanged from Saturday, but down 70 basis points from a week ago. against the Aussie were unchanged at 90.6 Australian cents. Against the euro were up 10 basis points at 54.9 euro cents. That all means our trade-weighted index starts today at just on 67.6 to be unchanged from Saturday and down 40 basis points from a week ago. And the Bitcoin price starts today at $103,011 and up 1.5% from Saturday. A week ago it was $101,044. Volatility over the past 24 hours has been modest at just on plus or minus 1.4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.